Hi, gang. I thought I would do a short update because today was pretty important, being the last day of the quarter, and we're 5 weeks out from the election. So these market updates are going to be shorter because I'm just going to try to focus on the most important thing. Some of you know that I used to do a subscriber-based newsletter where I used to cover 30 markets and I used to write 30-page PDFs like 3 times a week. Well, I stopped doing that because I wanted to concentrate more on the trading aspect of things. But it's still important to be on top of the market so you don't get caught on the wrong side. So here we go. And if you're not familiar with my work, just take a deep breath, roll with it, because price and time is exactly how markets work, and there are different strategies and tendencies that the market has. Now, patterns are like snowflakes. They tend to repeat over and over, but no two are ever exactly alike. So we have different tendencies, and there's a few of them on this chart right here. Okay, so this is Friday. This was the picture, the high. The picture was from Friday night. The last leg was 797 points. The whole pattern from the low to the high was 96, 180-minute bars. So that 97 and 96 matches. Now we have the last leg, which is 797. We have the first leg, which is 1060. And then we have the middle leg, which I'll call the third wave, which is 1,581 points. So when we take the last leg and divide it into the third wave, the ratio is 1.98. Okay? So basically, what we have here is a match between the last leg at 797, the ratio of the third leg to the last leg, which is 1.98 times the size, and it's 96 bars for the whole pattern. One more thing, the whole move is 2,572 points. The third wave itself is 73 180-minute bars. So, folks, this is not a coincidence. This is how the market lines up. Okay. Now, I just did a video yesterday on traps. And so right now, on Tuesday morning, we're going to see if this last green bar, the people who bought on Friday are going to get trapped. And if this turns down, then, a lot can happen. We shall see. But what I need to show you is what happened this afternoon. Okay, this is Monday's pattern. And here's the trap line as I showed you. And the high was 43,004. And on a 15-minute time frame, it was 104 bars down. Now, for those of you who are uninitiated to this is the sort of thing that happens all the time in the market. For me, I look at these as important markers for turns because price and time are matching up perfectly. 43,004, 104 bars, you're sitting right at the trap. But here's the interesting part about today. You know what happened with the Fed last week. You know what happened with the Chinese. They had their biggest stimulus package since COVID. And so what people are thinking about, and they may not be wrong, is this the beginning of a new easy money cycle? We shall see now, won't we? Now, the reason against this is because big money players like Warren Buffett have already been pulling billions out of the market. So billions, I'm not sure about that. So let's just say, let's check that and say that they that he's pulled a lot of money out of the market. Okay, so here's the thing. You have this very interesting low. You're sitting at the trap, and we have end of quarter window dressing. So the way I was looking at Monday is we know it's market tradition for the mutual funds and whoever else to buy certain stocks on the last day of the quarter because they want to show their clients that these really good stocks are in the portfolio. And this is just another game that is played by the smart money. Okay? Now, the problem is the first 2/3 of the day, as you could see, like 3/4 of the day, was down. So, were they really painting the tape? Were they really doing end of quarter window dressing? Good question. Then they came in the last hour and the last couple hours, and yeah, that's window dress. That could very well be window dressing. So the question is, Tuesday, will the real Mr. Market stand up? You know, there used to be a show that I used to watch when I was a kid called To Tell the Truth. And I think they might have a modern version of it right now. But I'm dating myself to tell you that I used to watch it when Bill Cullen was the host and Kitty Carlisle. Anybody remember those people? Anyway, the the theme of the show was that they would pick a person. That interest, not a celebrity. Sometimes there was a celebrity, but they would pick an interesting person. Let's just say it was an airline pilot who had a really interesting life. The panel would have to figure out who was the right person, and there would be three contestants, and the two of them were imposters, and one of them was the real person. And so they would play the game, and the panel would try to figure out who the imposters were and who the real person was. So the reason I'm telling you this is one of these is the imposter. Was it the selling based upon the reading that I just showed you? Or was it at the end? We're going to find out tomorrow. All I could tell you is with this trap line, the high if this thing sells right from the open, that means this becomes a rejection zone and there's no more buyers up here. I mean, are these buyers just painting the tape or are they real buyers? Is there going to be follow through? And the reason we're asking these questions, simply put, is because today was the last day of the quarter. And this is how Wall Street rolls. Take a look at NVIDIA. And for those of you who don't know, NVIDIA topped on June 20th, which is the seasonal change point for the summer. And I found that very interesting because it was 617 days from the 2022 bottom. It's also 261 months from the 2002 low bottom. So I've been tracking this thing since June. July was 262, August 263, September 264. We're hitting month 265. The election is month 266. No fretting because it didn't peak. The market did not peak in 261 or 262 because the people who follow my work closely know that the 65s and 66s carry a lot of weight. Reference the bottom in the SPX in 2009 is 666.79 and the bottom in the Nasdaq was 1265. So and not a lot of people know this, but Gann knew it because Gann told everybody that 66, 67, 2/3 is a very important market number, and I'm finding that to be true. Okay, so the last leg was 89 degrees on the Gann calendar. And if you don't know about the Gann calendar, There's another video here that talks about it. We have a manual that you could learn how to do this for yourself. And it was also 88 weeks up. Okay. Why is 88 important? Because right now, if you take this leg in relation to this leg, it's an 88% retracement. So it's either going to jump this polarity line or it's not. And the reason I'm showing you NVIDIA is because I think it's the single most important stock in the world. It's kind of like Qualcomm was to the internet bubble back at the turn of the century. And for those of you who are stock market historians, it was in the 1920s the most important, impressive stock of all was RCA because the main technology back then was the introduction of radio. Okay, so you got NVIDIA has a chance to roll over just like these other two. Now let's take a look at the NASDAQ. The NASDAQ is also very interesting. Why is that, you ask? Okay, because the high, see, you notice the NASDAQ hasn't made a new high, but what ended up happening is that it peaked on the 110 DG vibrational day of the year on the Gann calendar. The high from last week, from this low back in April, is 110 trading days. A nice match. Not only that, but it's 2618, 2,618.80 points up. That's a perfect golden spiral. Now, the thing is, the Dow had a perfect golden spiral relationship and it violated it, and there were a few other golden spiral violations that have violated. So the bottom line is, are we going to see another bearish dud, or does this one have legs? Is this the real deal? It may or may not be, but you have to respect the market at this time of the year. Now, what I'm thinking about for October, the most important dates in October is obviously October 7th, because that's when the war started last year. But I point towards October 9th and 10th because that was the bottom of the 2002 market, the top of the 2007 market, and around the exact date, around the 20th, is the anniversary of the 1987 crash. So we're not out of the woods. We have some very interesting anniversary dates coming up, and we shall see. Okay, but the bottom line for tomorrow is the following. What is going to happen at this trap line? If this gets taken out to the downside, it's going to go at least to this 200 period moving average on the 180 chart. That's like the first place it'll stop because it held it right over here. But we're looking at the 200-day moving average down here. We're probably headed there. If it breaks. If not, well, then at least in the very least, the NASDAQ's going to retest the high. I'm not going to come here and it's not my job to make a prediction. It's my job to tell you where the hot spot is on the chart and what you should be doing accordingly. And by the way, I don't offer the stock trading, futures trading is not for everyone. It's high risk. You should contact your financial advisor. And Lucas Wave International or me, we are not offering financial advice, and we are not legally liable. This is for education purposes only. Okay? So, We move on. As I told my posse yesterday, in every video, there's going to be some special discount. My newest teaching is the ultimate guide to bull and bear traps and emotional inducements. It's a PDF manual. It's $37 through PayPal. You send funds to lucaswaveman@gmail.com or request an invoice. Finally, you won't see this price anywhere else. I mean, I have a Substack. I put out an eye contact promotion. Right now, we're working on a new website. We've been working on it for a while, and I want to see what's going to happen with the election before I finish that thing. In any event, we have a YouTube special. Training is $587. It includes a call every other week for 12 months, unlimited email support, all the manuals I have, which is a complete NFL-sized playbook. It's like probably, I don't know, 35 manuals and 3,000 pages. So let's say most of my manuals are around 80 pages. So 80 times 35. Yeah, it's around 2,800 pages that you get. Now, the latest manual that on bull and bear traps, it's a little bit shorter, and the price reflects that. But don't think that because the price is only $37 that it's less powerful. It's very powerful because it's going to teach you how to stay on the right side of the market, and it's going to teach you how to make your trading a lot easier with the zero sum, because once the trapdoor shuts, and I'll show you how the trapdoor shuts, you have a very good chance to break free and catch some really nice moves. So this is a really good manual. So that's basically all I wanted to do for today. Just a short update. I'm going to try to do some more of these updates shorter when I feel like there's something really important in the market, and I'm going to put up some other teachings. I just we relaunched the video channel yesterday. It's been down for 6 months, and now I really want to build it. Okay, thanks, and we'll see you on the next video.